and welcome back to ICT Simplified. Today we'll cover the ICT breaker block. I'll teach you what creates them, how to identify them, and how to use them. The first thing we'll cover is what creates them. So let's use our bullish and bearish diagrams for example. The first step, what you want to look for and what creates a breaker block is a raid on buy or sell stops. In a bullish example, it would look just like a normal uptrending market. In a bearish example, it would look just like a downtrending market. The second step is a market structure shift. In a bullish example, it would be when a previous lower high is broken. In a bearish example, it would be when a previous higher low is broken. So now that we have gotten a raid on our buy and sell stops, followed by a market structure shift, where is our breaker block? In a bullish example, the breaker block always resides between the two lows which formed prior to the bullish market structure shift. In a bearish example, the breaker block always resides between the two highs which formed prior to the bearish market structure shift. The bullish breaker block is a short-term high consistent of a single or series of up-close candles within the price swing which raided the sell stops. To make things simple, the bullish breaker block is always the last up-close or series of up-close candles prior to the raid on sell stops. The bearish breaker block is a short-term low consistent of a single or series of down-close candles prior to the raid on buy stops. If you're looking for a bullish breaker, the breaker block is always bullish candles within this price swing. If you're looking for a bearish breaker, the breaker is always bearish candles within this price swing. So now that you've learned how a breaker is created and identified, let's go through some examples. For our first example, we'll look into EURUSD on the 4-hour time frame. So what we have here is a clear as day downtrend, and what we can see here is a retracement followed by a failure swing. So what I'm looking to see is if we can raid the sell stops residing below this low and see if we can get a close back up in order to create a bullish breaker block. So let's see what happens. So as you can see, we raided the sell stops residing below this low, and we also created a market structure shift right here. Since we have gotten a raid on sell stops right here, followed by a market structure shift right here, where is our bullish breaker block? Well, the bullish breaker block is the last or series of up-close candles in a short-term upswing prior to the raid on sell stops. So that would be right here. So now let's put a buy limit right here and see what happens. So as you can see, we got a successful breaker block right here on the 4-hour time frame. The date is the 27th of September 2022, and it's a textbook example of a bullish ICT breaker block. We got a raid on sell stops, followed by a market structure shift, and a return to the breaker block resting right here. So for our next example, we'll go over USD CHF on the 50-minute time frame. And what I can see here is that we are in a clear as day downtrend, but we have created a short-term uptrend on the 50-minute time frame. And we have also gotten a raid on buy stops right here. But we don't know if this is a raid unless we get a market structure shift down. So let's see if we get a market structure shift down to validate that this candle right here will be our valid ICT bearish breaker block. So let's see what happens. So as you can see, we raided the buy stops residing above this high. We created a market structure shift indicating that we want lower prices. So what we can do now is enter at the bearish breaker. So we will put a sell limit right here and our stop loss above this high. And let's aim for a 1 to 2 risk reward ratio. Okay, let's see what happens. Well, that was a really quick trade, but it was also a textbook example of an ICT bearish breaker block. So all you really need is a raid on buy stops, followed by a market structure shift, and a return to the breaker. And as previously mentioned, the breaker always rests below the two highs, which occurred prior to the market structure shift, right there. So for our third and final example, I will give you guys a bonus showing you a So for our third and final example, I will give you guys a bonus and show you a combined breaker and order block. So as I mentioned in my previous video talking about order blocks, what you need to look for is a draw on liquidity, which we hopefully are about to get right here. And if we get a draw on liquidity and close back above the sell side liquidity price point, look for a market structure shift, which would give us both a bullish breaker block and a bullish order block. So let's see what happens. So as you can see, we swept this liquidity right here and closed back above. So now we need a market structure shift to occur. Our market structure shift would be above this point. So let's see what happens. Now that we have gotten a market structure shift, we actually missed our opportunity to enter right here. But let's see if price retraces back and gives us another chance at an entry. So these two candles are our order block, and these two candles is our breaker block. Let's put a buy limit right here and see what happens. So as you can see, we didn't come all the way up to our target, which was at a 1 to 2, but price reacted very well off our breaker, as you can see with this large wick right here, and it reached back up to a fair value gap resting right here. I will cover fair value gaps in the future, but until next time, have a good one and see you again.